everyone. This is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today, we're going to talk about how you and your business can get approved for invoice financing or credit card cash advance financing. Okay, let's go straight into it. First, I want to clear up there's a difference between a credit card cash advance versus credit card cash advance financing. Okay, so essentially how it works is a cash advance, you guys know what that is. For those who don't, it's perfectly fine. A cash advance from a traditional credit card is where you have a cash advance limit. You go to the bank and let's say your limit is 1,000. They will let you put in your credit card, put in your PIN number. In most cases, most banks will tell you that you have to have an account there, or they'll try to make you open an account. But of course, their bank, their rules. Once you get past that part, then it will show your identification. Now you must have the PIN number ready. If the PIN number is incorrect, then you can only do it one time a day normally, but that's what most credit card companies do just for fraud purposes. And that's a tradition. And of course, once the process is complete, then essentially you get the money, from that cash advance. That's not what this video is. This video, we're going to be talking about invoice financing for your small business, okay, or credit card advances. Technically, it's not a cash advance, but it's not a loan. It's essentially they're buying your future business. Okay, let's explain what that means. So invoice financing, okay, number one, you must have a small business and you must be collecting invoices, essentially getting paid from invoices. Let's say, for example, you're a contractor and you obviously, do quotes of work, you put it into an invoice, you send the invoice, they pay the invoice, and they essentially do it like that. If you set up your business like that, then essentially what's going to happen is if you need to get financing, what most banks will do, and it may not necessarily be a traditional bank. There are certain banks that actually specialize in certain finance companies that specialize in small business financing. That's a completely separate sector. Just like in the housing market, it's different from getting an auto loan. So this is completely separate. And what they do is, let's say, for example, you're averaging, let's say $10,000 a month, just as a regular number in invoices, gross, before any expenses, right? So let's say, for example, you're putting your material cost in there and you're averaging, I don't know, $10,000 a month, okay? Then you would be able to borrow no more than $10,000 in most cases. Certain finance companies let you borrow a little bit more. Some finance companies let you borrow a lot less. Some finance companies base it off your credit report. Some finance companies base it off of how long you've been in business. So all that plays a role. Now, do they look at your business credit score? In this particular situation, it can be either or. So you can get approved without any business credit score at all. And why? Because you have your personal credit, which you're the personal guarantor, obviously. But the best thing about this is that it'll show up on your personal credit report. This is going to show as an inquiry on your business credit. And the first time, most companies, if you build a relationship with them, a lot of small business finance companies are all about relationships. And so how does that benefit you? Number one, the interest rates are going to be better every single time you do business with them. Number two, the first time they'll run your credit, but the second, third, or fourth, or whatever time, depending on how many times you need invoice financing for whatever reason. Same thing for credit card advance financing as well. And essentially, they may not necessarily need to run your credit, going forward in the future. Okay. Now with credit card, financing or credit card advance financing, essentially what they're doing is they are buying your credit card transactions. So for example, they see that your business is doing, 10,000, 15,000, 12,000, whatever. And sidebar, some of you guys are probably like, well, I don't have that much business, that much revenue yet. Most small business financing is going to want to see at least 5 to 8, sometimes even $10,000 gross with your credit card financing. The reason being is because, sorry if you guys hear that ding, I'm getting a lot of dings all over the place. But either way, what you're seeing is that they're going to want to see a consistent stream of how your business is collecting money. Okay. And again, the privilege behind all of this is not on your personal credit report. You may or may not have to have your credit ran once you build that relationship with them, because they really care about how strong the business is. They're looking to see what what you're doing. And you're probably like, well, Calvin, why would I need that kind of money? Well, you could use that for expansion, for growth, for equipment. Now there is of course different financing for equipment and things of that sort, but this is one of the easier ways to actually get that, especially if your equipment is like a few computers, a desk, and stuff like that. But if you're talking about getting a dump truck and things of that sort, obviously equipment finance is going to be specifically for that. But with credit card cash advance financing, they're essentially buying all of your advances in advance, and so it's not really a loan per se, but you're essentially paying them for what they paid you for in advance. They know that you're going to make X amount of dollars over a certain period of time based on what you've done in the last 3 to 6 months, because they will ask for bank statements. And that's just how that process goes. Anytime you're borrowing money, they need to kind of follow that money, and that's the purpose of having business credit, is that they're more so focused on the business itself. Now, what's the lowest score you probably can get away with that? Probably about 550, 580, really depending on the revenue stream of the business. Now, you're probably saying, well, man, how can I get this going? How can I qualify for this? Everything is going to be in our business credit course. We have vendors, a list of vendors that are open to financing. We have representatives that we refer out to for business financing as well, and they do specialize in invoice financing if you get paid invoices, or credit card advances if you get majority of your business come from credit cards as well too. If your majority of your business is cash, that's not the end of the world, because you probably can still show some consistency through your bank statements, but you really want to convert to a credit card, or at least some type of invoice financing. That way, let them pay the invoice with their debit card or credit card. Cash is okay, but you want to have an electronic paper trail, from that. That way, when you want financing, you need to prepare for growth. I don't think a lot of small businesses prepare themselves for growth, and their stuff is everywhere. You got to have it where it all makes sense. You never know what they're gonna. Well, I won't say never know what they're gonna ask for, but you never know where your business is going to take you. And especially if you are, if you got a good amount of revenue, you should be able to show that paper trail and get that. But it's very simple, it's very easy, and that financing is available if you have a small business. Now, let's say you have a small business, but you don't have revenue yet. Then those financing companies are going to be really looking to see how you're going to pay them back. They're not looking to see if your business is necessarily legitimate, which everyone assumes, but they want to know, hey, listen, you're using your business credit, and of course, it's only so much that we can kind of see from this entire process. We want to make sure that you can actually afford what you're trying to get, and that makes perfect sense, right? And because they want to make sure that you can afford those payments. And another thing too, what's great about it is that they can set up payments for you on a monthly basis, on a weekly basis. Some do every other day basis, depending on what type of industry you're in. So again, there are companies that will help you and will finance you, but you gotta start somewhere. All right, so with that, of course, hope you guys like this video. If you like it, you want to share it, and as always, be sure to subscribe, as we have nothing but great content on the way. Thank you all so much. Have a great day.